Hello there. This is Bruce at Fleet Capital Management. It's Friday afternoon, the 10th day of October, 2025. Had a very bad day on the stock market today. Not so good yesterday as well. Or was it Wednesday? I'll have to remember. But I want to show you some how I approach the market when we have these really bad days. And I think you will find this very, very interesting. So stay with me on this. We always start by saying the video presentation is intended for educational purposes only. The discussion of any security is not a recommendation to purchase or sell the security. As you know, I am always available. Bruce at fleetcapitalmanagement.com. So I had introduced you to this, what we're calling this quick turnaround stock trading system, where we're using multiple platforms of AI, and we're choosing just a couple of stocks each time, and we're taking profits quickly. If you have been watching those trades, you know that that system has been working perfectly. It's been working exactly as I designed it. Of course, today it didn't when we have this massive downdraft because of Trump throwing a temper tantrum with inflicting new tariffs. It seems like that's his only weapon against China. Nothing works then. But in aggregate, that system is working perfectly, and I am working every day, tracking and trying to make it a little bit better and a little bit better. And then once this market turns around, you'll see we will have a lot of stocks in our portfolio, just grabbing these profits as quickly as we can. I also introduced you to a new medium term trading strategy that we're just looking for very high quality companies with strong fundamentals, strong technicals that are, here's the key, that are breaking out from a consolidation phase and they have upside momentum. Last time I spoke to you about this, we had not purchased any stocks. Since then, we have purchased two. We purchased Garmin, and I want to show you why. You see this? This is a weekly chart, so each bar is 1 week. And what is bracketed here is this is called a consolidation range. And then we had a breakout from that consolidation to new highs with good volume, and this is showing strong momentum. We already had fantastic quality and fundamentals and technicals and everything else. But on this system that I created, I'm patient and waiting for breakouts. So that was the first stock we bought. Second one was Nvidia. Lots of people asking why I hadn't gone back into Nvidia. Well, for the last, I think this was 11 weeks. Yeah, this is an 11-week consolidation. It was stuck in this consolidation phase. And for this system, I'm waiting for a breakout, as you can see right there, a breakout and a close above the consolidation phase. Obviously, it is extraordinary when it comes to quality. We have some momentum, not a huge amount yet, but I'm hoping that will turn up. We did have it on some volume. So I just wanted you to know that these two stocks are longer term. My mental objective is 3 to 6 months, but I also watch very closely and I have my stops somewhat close. The stops are based on the momentum. So if momentum turns south, I'll just sell it and then we'll wait for another time to buy it. So I want to show you that. There are a number of market signs that this weakness that we are seeing right now should pass. And let me go over a couple of them. And I look at this stuff all the time, and I just want you to understand why I'm so calm when we have this terrible market drop today. It's because of statistics and analysis, and that's just the way I think. The fear index, which is important, has gone down into this lower part of the fear gauge. If it goes a little bit lower over the next few days, we'd be entering extreme fear, and extreme fear is almost always the bottom. It's just extraordinary how often this happens. I've created a chart that I won't go through right now because it's a very busy chart, but it shows what the market does every time it hits extreme fear and every time it hits extreme greed. So I actually like that this fear gauge is falling. It was up in the greed area not long ago, maybe a week or two ago. It fell into neutral. Now with today's performance fell down to fear. We'll see how it opens up on Monday, but fear sometimes creates opportunities. Here's another thing that I wanted to show you. This is the S&P 500. This happens to be on a daily chart. And there's an indicator down here that is a fairly complex indicator, but it's measuring volatility spikes. We always look at the VIX, and I'm going to show you the VIX, but this is on the S&P, and P, and I can do this on every single stock. And all I wanted to draw your attention to is that every time these bars down here, they turn green and hit a threshold, that almost always suggests we've just gotten to a bottom. If you look at this one, nothing green except for this bar, and it touched that threshold. This wasn't a massive fall, but it was a bottom. If you look at this one right here, again, not a massive fall at all, but that was a bottom. This one right here was actually just a little bit below the threshold, so that one might not count, but it was on a pullback. And then here's today. This is a really, really big bar, and we did break that threshold. So what this is suggesting is, it's not suggesting that this is the bottom. It's suggesting it may be very close. It may be the bottom, or it may be very, very close to the bottom. And you can see we had a pullback here, but its volatility gauge didn't spike enough to turn the bar green. So it's just another piece of information that I use that is important to me. Another thing is frequency of negative returns. This is over, I forget how long, this is starting in 1992. We have negative returns 42.5% of the time. So think about that. If you look at 100 weeks, 42 of those weeks are going to be negative. If you look at monthly returns, 34% of months are down. The reason I'm showing you this, and 45% of days are down. If we just round this to 50% to make it easy, 1 out of every 2 days is down. 4 out of 10 weeks are down. This is a normal part of an uptrend. It's a normal part of an uptrend. If I go back here, this is a really strong uptrend that you're seeing. But look, we had a pullback there. We had a pullback here. We had a little pullback here. We had a little pullback here. We had a little pullback here. Little one right here, and kind of a bigger one right there. That doesn't mean the trend is over. What that means is there's some profit taking going on, and today we know exactly why that's happening. It was because of Trump's China tariff blustering that he's doing. So I just wanted you to know that that's a normal part. None of us like it. I hate it, but I do understand that it is very normal part of market performance. Now, I've heard this for decades. Some people say I have nerves of steel or ice in my veins when it comes to the stock market. Maybe that's kind of true, but it's not true when it comes to sports. So bear with me just for a second. My Mariners have not been in the playoffs for 24 years. And tonight is game 5 of a 5 game series. So this is it. This is it. There's our boys over the Puget Sound. And so you understand, here's the Seattle Mariners. If we win tonight, we go to the championship series. That's the ALCS, the championship series. If we win that, we go to the World Series. So we're not very far away. But we have to win tonight because we are tied with Detroit 2-2. And I'm dying. This is, I don't have nerves of steel when it comes to my sports. So those of you who are sports fans will completely understand. Those of you who don't will think I'm nuts. And that's fine. That's fine. But let's get back to seriousness. Single most important thing to know is whether the market's going up or down. Everything follows from there. So let's look at the market. It was a bad day, but let's look for trends. We had a bad day. We've been going mixed and down for a few weeks now. Okay, this has been a choppy ride. And in this choppy ride, even on down days, our short-term trading, we have been drawing profits out of the market, whether it's up, mixed, or down. Today was huge down. So no, we're not taking profits out of the market. But R3 is still, it's just about touching. It's just getting ready to turn negative. I hope it doesn't. On the weekly chart, we do have some mixed results, but our 2 week moving average is still above our 10 week, which is good. This is getting ready to turn yellow. It's just going to depend on what happens on Monday. The most important thing on this chart is probably this. This is our bear market avoidance indicator, which I'll show you when we get back to the charts. I'm not seeing anything, any problems here. Now, earlier in the week, because I plot VIX, the fear index, usually on Fridays, once a week. But on Tuesday, it popped over 17. See that? That's a cautionary tale. And that was shutdown day 7 for our federal government. 8, 9, now we're in 10. But this happened. We went red. We went over 20 because of tariff threat blusters. Um, so, do I think that either of these two things will cause a bear market? No, I don't. First of all, on the tariff threat, he'll back down. He's back down. I'm a trend follower. He's back down every single time. So I don't have fear. Could this cause some market heartburn next week? Yeah, it could. But long term, no. Will the government shutdown cause long-term bear market? No, because the government will reopen. It's funny. Trump had a shutdown in his first term. He's got a shutdown in this term. Now he's laying off federal employees because he doesn't care that people need to make a living, especially going into the holidays. He just simply does not care about that. But I don't think that these two things, in and of themselves, will cause the economy to fail, will cause a bear market. I just don't think that that's the case. I think there are other things that could, but not those. Go over to the charts. Here's the S&P. We looked at that a couple of minutes ago. This is the daily chart. Here's that indicator I was pointing out once before, and you can see we've got that green over the threshold. Um, Another interesting thing, and the reason I circled this gold line, that's the 50-day moving average. Look at where the market closed, just above that 50-day moving average. I find that quite interesting. That is usually an area of support. We will see next week whether that level can hold. We did close significantly below the linear regression. Those are the two blue lines and the reds, probably a little bit hard to see. But one of a couple of things could happen next week. Number one, we want to see this hold the 50-day moving average. On Monday, could it go down below it? I want to see where it closes. I don't care what it does during the day. I want to see where it closes. So Monday is going to be very interesting compared to that 50-day. Number two, I want to see if we start to snap back into this linear regression. If those two things happen early next week, Monday, Tuesday, Wednesday, if we hold this 50 and we start to move back in, at least to the bottom line of the linear regression, then I'm not worried at all whatsoever. What if that doesn't happen? If we close, not where we open, not where it trades during the day, if we close below the 50, then we're looking for only one more day. If the next day it doesn't get back above, well, we've got a completely broken trend, and then we might have some more downside. I don't anticipate that happening. Could it? Yep, it absolutely could. This was the last massive tariff blunder that Trump made. This was, what was this called? Liberation Day. Oh, we were so liberated. So this huge drawdown was all tariff related. That was all tariffs. This is all tariffs. Look at what happened. Now, this one went down, but we were really shocked this first time this is not the first rodeo anymore. And then the market just snapped back up. So I just wanted to give you my thoughts on that. I had a number of alerts go off earlier that securities have broken their alert stops for me. I will be putting in live stops. I will be giving them just a little bit more room because I want to see if this breaks down and then pops back up. You always look for the reaction, not what happens, but then how it reacts to what happens, and that keeps you in stocks. But you are seeing very clearly today is a perfect example as to why I have put so much focus into this short term trading system that has been doing a phenomenal job, just taking profits out of the market almost on a daily basis. And I'm sticking with that. As long as this guy's in the office, short term is best. I am putting a couple of stocks in for hoping a little bit longer term, bigger gains, but our focus is on all of these short-term profits that we've been taking. There was a stretch of days, a long stretch of days where we took out like 5% a day, not 5% of your whole account, but 5% of the position. But when that happens every day, it really can make a difference. And we're just getting started with that. We are just getting started. So I'll end by saying, early next week is going to be interesting. Oh, I had one more thing to tell you, and I forgot to put this on a chart. Um, when uh, when we think of seasonality, August, September, October are the worst of the 3 months in the market. And some people say, well, October is the beginning of the fourth quarter, and it is when the market really rallies. Yes and no. That doesn't start until around the 25th, somewhere in that week of October. Between now and then, so the next 2 weeks are actually the two worst weeks of the entire year when it comes to the stock market. So, yeah, we might get bounced around the next couple of weeks. We might get stopped out of a number of things the next couple of weeks. I will be going into nothing new because the because of the VIX. The VIX is now over 20. If that doesn't head back down towards 17, I will not be adding new securities while it's up that high, that fear index. The other thing is if that white line, which is touching the blue line, if it crosses below the blue line, so that's the 3 week, the 3 day crossing below the 21 day, if that happens, that is also a trigger that says do not buy anything new until that starts to reverse. So you won't be seeing new securities. I'll be managing the securities that are in there. My guess is we will be stopped out of some of them. I'm not worried about that because we will find new securities very easily to go back in. I can't tell you how much I love this short-term trading system that we've created, and we'll be pumping those out. I'm trying to get all of this stabilized and aggressively ready to go for the very end of October, which is only a few weeks away, because that's when, if we're going to get a Christmas rally, a year-end rally, that's when it starts. It's the fourth week of October is when that really kicks in. And I want us completely ready. So if you see us getting stopped out of a number of securities and going into cash, and we're just sitting in there and you're thinking, well, what's going on? We're kind of waiting. So when the VIX is elevated, no new stocks. So that's a story. If you have any questions, feel free to reach out, shoot me an email. Easiest thing to do is hop on my calendar and let's just do a quick video call. We can talk about your account specifically. But these, like I said, these short-term trades have been working like an absolute gem. I'm working very hard to refine it even further, which will be happening. I'm just really excited about that, and this too shall pass. Again, I'm not terribly worried about the tariffs with China. I'm not terribly worried about the government shutdown. Both of those will end. Um, they just will. And so, what I am worried about, if you're wondering, is I'm worried about the US debt. I think it is absolutely at a precipice. I'm worried about the housing market. I'm worried about the auto industry. I'm worried about how many bankruptcies there are throughout the country. I'm worried about how many businesses are closing. Those are things that I'm very worried about. But as long as the chart shows bullish, and today it's not great bullish, but it has been and it will be, I suspect. If the chart's bullish, we're going to be in. We're going to be in because the market doesn't care what my opinion is. So, with that, have a great weekend. If you're a sports fan, man, this is the time of year. Everything's going on, and enjoy your weekend. And please, please reach out to me if you have any questions or concerns. I'm always here, even on the weekends. Never hesitate. I'm always here for you. Okay? Talk to you soon. Bye bye.